HIM stock is crashing, and this is after the FDA is recommending that peptides get reclassified so that HIMS can actually compound and make money off them. So I'm going to go over exactly why HIMS is crashing when it seems like it's positive news, as well as go over the general stock market and my $100,000 challenge, week 60. Let's get into it. All right, so if you can, give me a like and subscribe. I really appreciate it. Just let's get into it. Why is HIM stock crashing? The stock market performance, which has actually been bad lately, and my $100,000 challenge, week 60. Why is HIM stock crashing? The FDA just had this meeting voting to recommend that these peptides actually be reclassified so that companies like HIMS can actually compound them and sell them and start making a lot of money. So why is HIMS going down if they're saying that peptides should be approved and reclassified, right? So we have the top three, BP157, KPV, and TB500, MOTSC as well, but like these are the top three that are really talked about, and you have an 8 to 6 in terms of they said, yes, we recommend it should be reclassified, to no, and then those are the top three in terms of like the ratio, which is good. These are the ones that HIMS will be using a lot as well. So again, why is HIMS going down? Well, there's a few reasons. Number one, the FDA, there's in the debate, the FDA staff scientists, the scientists that are on the FDA staff and the public health advocates all strongly opposed the change, warning that human clinical data is severely lacking and that the drugs carry unverified health risks. Proponents on the panel argued that allowing regulated compounding pharmacies to make these items will steer consumers away from a dangerous, unregulated online black market for research chemicals, which is true, right? It's like, well, people are getting this stuff no matter what, right? It was like marijuana in the 90s and the early 2000s. It was like people were going to get it regardless. So now it's starting to become recreational, and it's not like it all, I mean, I'm sure, of course, more people are doing it, but just most of the people are not buying it off the black market, off the guy down the block or the street, whatever, you know what I mean? So now we also have political influence. Now the outcome marks a significant victory for Health Secretary Robert F. Kennedy Jr., who is a vocal proponent of peptides, right? And he wants to actively push back on the Biden-era compounding restrictions. So that's a win for him, and he really kind of influences a lot of what is going to, in the end, be approved or not approved. And so he's a proponent for peptides. The end result of this meeting was it's recommended to be reclassified. So again, why is HIMS going down? Conflict of interest concerns. Now, the vote was highly controversial due to the panel's unusual makeup. The Department of Health and Human Services recently appointed several new members to the committee who have direct financial ties to clinics or companies that sell peptides, right? So, like, okay, what? Of course they're going to say that it should be reclassified and approved because they want to get money, right? So, there's a little bit of this controversy happening. Then also, now, the vote is a critical hurdle. It's not a formal FDA approval. It's not. This is nothing legally binding in any way, shape, or form. The FDA is not legally required to follow any of the advisory committee's recommendation, although it historically tends to do so. So that's good, right? Now, the final decision will eventually be published as an official agency rule proposal. Now, when will it be proposed or actually announced? Well, that's also something else. Now, you talk about the timeline, right? The FDA's official administrative and regulatory decisions will take months or longer to finalize, right? So we have all of this happening, non-binding, right? The committee's votes were advisory only. The actual decision is later. Now, the long-term rulemaking, formally adding any substances to the 503A bulks list, which again, that means that HIMS can compound it and then sell it. It requires a formal proposed rule, public comment periods, and a final rule, a timeline that legal experts estimate may not wrap up until 2027 or 2028. So we're talking a year from now, right? Now, as an investor, I understand that I'm long-term, but the stock itself might not do what I want it to do because the stock market doesn't think long-term. It thinks short-term. It really does. Investors think long-term. The stock market thinks short-term. So the the actual stock itself might go down. It could, depending on their earnings, right? The earnings have to be good. That's one thing. Their earnings have to be good, because right now it just seems like peptides, as much as this was a hurdle, this was a nice step in the right direction, still going to be a while. Right now, people are getting really excited, and so they're buying the hype. And now if people are realizing, wait, nothing's going to happen for at least maybe a year and a half. So that's just where people are at right now. So let's go through the financials really quick of what could happen. If the FDA actually approves them, the financial impact on Hims and Hers would be transformative. So recently they took a pivot towards low, short-term, like low margin, right? Taking the Novo and Wegovy, making a deal. Basically, Novo makes the Wegovy, and then they're selling it to Hims for $20, and then Hims has to sell it for $25, and they only make $5. That's just a stupid example, right? But just so you understand that Hims is not making the product, therefore they cannot make as much of a profit. But unlocking custom compounded peptides provides a high margin engine to accelerate their path towards the $6.5 billion revenue. Now, again, when is that going to actually happen? I don't know, but they did say that they believe that they will be having $6.5 billion in revenue by 2030. That is what they said consistently over the last, I'd say, 4 earnings. If they say it again and again, that makes me feel confident that they know something, because they got their ears and eyes and everything, right? Their hands and all that, so that they feel confident that the peptides will be coming sooner rather than later. Now, the fundamental financial appeal of compounded peptides lies in, again, the gross margin, right? Right now, it's going to be such a high margin because they'll be able to make it themselves. So when you look at Wegovy and stuff like that, they're only making about 35, 50 gross margin, right? But the average revenue per user, obviously, is good because you're getting a lot. And I did the math, and basically, the GLP-1, the Wegovy, is about the same as peptides, right? If you take the highest, you take 50% of 300, you're getting 150. If you take 80% of 180, you're getting about 150 as well. So they'll be making about the same amount in terms of money off, but they won't even have, it'll all be controlled, right? They'll be able to control the prices and control everything. When Wegovy, all of a sudden, if Novo wants to hike the price up to where they're unable to sell it, that'll mess up their Wegovy product. Whereas in the peptides, they have full control. So that's obviously good. They also will do cross-selling, right? When it comes to marketing, they don't need to pay Google and Meta as much to acquire new customers. They just kind of cross-sell the products themselves, right? Now they'll have multi-category subscriptions where instead of paying $50 just for hair loss, you can be now upsold to $120 for joint repair and stuff. Now, I fell down a cliff over 100 feet, and this was 6-7 years ago, and if peptides and all that stuff was a little bit, maybe I didn't look into it as much. I've done some therapy and this, that, but I'm still interested. Maybe, hey, some of this stuff could work for me. And I am a Hims subscriber right now. And so, okay, yeah, I'd be up, so because it's just easy. I'm already in their network. I'm already in their ecosystem. I might as well, right? And then improve churn and retention. The thing about peptide therapies is that they usually are fast. You will see the results fast. So when you have something, you have a product, and it immediately makes an impact on the customer, that will help you retain the customer, right? So if they're able to sell peptides first and get out there and have everyone excited and feeling better about themselves because they bought peptides from, Hims, then that'll keep them on. They also are well positioned financially to fund the CapEx. They have liquidity cushion with over $750 million in cash and short-term investments. Vertical M&A opportunity, like I said, they're going to be compounding it themselves in their own facilities, and then sustained free cash flow allows them to absorb testing, legal, and compliance overhead. So they are in a good position. They could easily add 250 to 450 million in high margin annual if they only capture 5 to 8% of their subscriber base, right? That's amazing. And then it also, again, because it's high margin, it goes basically straight down to their EBITDA. So that's amazing. Now, there's a few risks. The FDA, The FDA could suddenly reverse something and have restrictions and this and that, right? It is subjected to political stuff, right? Science, things happen, and now they're like, oh, well, we're going to change how we should do it, so that could hurt them, right? Like what happened with the GLP-1s. That really hurt them. The supply chain bottlenecks, right now, they will, right now, the peptides are scarce, right? So it's gonna make the margins harder right now to start off with. But the good thing is that they will be in position, they'll be one of the best positions to offer it right away. And so even though their supply will be a little bit expensive, the demand will be very high, so where they could still sell it to a high price and be able to actually sell it still and squeeze as much of the margin as they can in the very beginning. And then obviously regulatory and marketing compliance. You can't just be going out there saying, oh, it's FDA approved and all this and that, and it's gonna make you age, slower. You have to be careful with what you're advertising, especially something like Hims. If you're just a guy out on the street and you want to hold up a sign, you can say whatever you want. No, it's gonna cure everything you have, right? But if you're someone like Hims, you can't. And so they have to be careful with what they're doing. So where is the stock gonna go? Now here's the chart right now. As you can see, it was down at these levels before 2024, going into 2025, and there's a lot of GLP-1 drama that happened, as you can see. But once really things started to stick, saying, hey, there's something wrong with this, Novo and all that, it continued to go down. Now it's down 55% since October 15th, but it is over double, or no, it was doubled until this last drop, right? From this bottom right here. I do believe it can reach into the 50s by the end of the year if their earnings are good. As long as they can produce some good earnings, then it will be okay. That being said, I don't know if Peptides is going to do anything for them now until there's more discussion of peptides, because now it's over, right? Now the discussion of peptides is over. No one's going to be talking about the meeting. No one's going to be talking about peptides until the FDA is going to actually make their decision. When they make their decision, it's up in the air. So we just don't know. There's not like an actual final date on it that they have to make a decision. So we're just kind of now going to be in the waiting game for it. So now it's all going to be based on their numbers, right? Hims is really going to be based on their numbers, what's going on with Novo, and how are they going to grow the subscriber base and their average, how much they're making per user every month. So that's that. Now, it's time to move on. Stock market update. It's been a little choppy. The S&P 500, this will show you it's more choppy for tech, is down 2.5% since June 2nd, up 17% since March 30th. But the NASDAQ is almost down 10%. It's almost in correction territory again. Right after this big drop, I mean, we went nowhere since this was November, right? We were going nowhere, and then we dropped. I mean, this was a total of, I believe, like a 12% drop. We are now almost at an 8% drop again. We are at an 8%. Where are we going to go from here, right? We're still up 20% since March 30th, but again, we're starting to reach back to these levels of our previous all-time highs, which is going to be, interesting. The stock market in general over the last week, you can see the electronic technology is okay, but technology services is not. Consumer services is not, and retail trade did bad, right? So those three industries, or the department, whatever, those markets did not do very well. Tech, even though it is selling off, still is also doing well. It's kind of weird, right? It depends on who you are. And again, the QQQ or the NASDAQ is really heavily weighted on certain, like a Google and a Meta and a Microsoft. Even though NVIDIA went up 2%, Apple barely went up. I mean, these are dragging it a lot harder, right? So the AAI Sentiment Investor is where, some really good investors are getting together and they're making their votes on what they think is going to happen. Now, this week they voted they're getting more bearish, right? You can see that it jumped 10%. And this vote happened on the 22nd, right? And the vote Friday is the 24th. So this was published 2 days before, and the market has completely, I don't want to say tanked, but the market's gone down a lot in the last 2 days. So it's very interesting. And then again, the neutral went up. Neutral went up to 28. But the bears have gone up to 42%, which is the historical average is 31. Which, again, it's high. It was at this about a month ago, just 3 weeks ago. It was at this point, right? So clearly, investors are a little bit sketchy. They're just bouncing back and forth. They don't know what to really think of. We're in the fear and greed index. What the emotion is, right? We're in fear. A week ago, fear. A month ago, fear. So we've been fearful for a minute now. A year ago, extremely greedy. Stock market's emotional. Let's go over some earnings. This is earnings season. So the big ones that I see, Boeing, Coca-Cola, and UPS. I see Seagate and Visa, Microsoft, Meta, Robinhood, ARM, Qualcomm, MasterCard, Apple, Amazon, ExxonMobil, and Chevron. I also have Cheesecake in here just because my kids also have an account and they own Cheesecake. So, I just put that in there. But really, for the gas, the oil, all that stuff, right? We got Exxon and Chevron, Boeing, Coca-Cola and UPS, kind of just to see what's going on with the economy and also transportation fees and all that stuff. Seagate, of course, the tech, memory. Visa is just kind of more of like an economic play. ARM, Qualcomm, Meta, Microsoft, Amazon, Apple. This is all tech, right? And Robinhood, again, is kind of tech. People know about that, right? So it's all over the place. Big earnings, though. Big earnings. You even have Chipotle in here. You got all kinds. SoFi, PayPal. I mean, there's a lot of big names in here. So my $100,000 stock market challenge week 60. As you could probably assume, I'm a investor in HIMS. HIMS went down like 14% today. So today, on Friday, it went down 4%. I'm at $9,390. Not so good, right? So like I said, HIMS went down 14%. Not good. Celsius, I actually added 5 more today. It's not in here. I'm down 22% on Celsius. My average cost base is $35, and I honestly did not think it would get into the mid-20s again. I have some Celsius shares in other portfolios at 25, and I'm shocked that it's near that price. So I did buy some around 27, something like that. And so, but as you can see, the 1 week performance, I mean, this is awful. MU is the only one that's done anything. It's one of my lowest positions, right? Lowest weighted position. So that didn't really do anything for me. Netflix I just bought recently, so I'm actually up on that even though it's down 7% because I think that's including last Friday when they announced. But anyway, not looking too good, not feeling too good. But I'm also I'm long term. This whole challenge is, if it goes to what I have planned and all that stuff, I'm only at week 60. I know I'm saying only week 60, but if I do this for as long as I think it could possibly take me, I'd have to go to week 520. That'd be 10 years, right? So I still have a long ways to go. Long ways to go. A lot of investments, a lot of mistakes, a lot of, wins. Both of it. As you can see, I have 350 cash, but actually spent some of that, and we'll see. Oh, this is not my transactions. I'll show you what I bought. So week 60, my goal would have been 12,400. Now again, this is just growing at 20% a year, starting at my starting point. So this is kind of like where I would have wanted to be, I guess. This is where I'm at right now. As you can see, it's been choppy. I was catching up. I was really catching up to this point, right? I was catching up, and now I'm starting to pull back. Down 4% for the week. My goal, against the goal, I'm minus 24%. But I am up 27% since I started this whole challenge, even though I've been putting in money. So if you take away that money, I'm actually down 22%, basically. And I added $250 this week as an extra because I wanted to buy some Celsius. I only bought 5. That was about half of that. So I'm going to see if maybe I buy another 5 next week. So I did put in a total of $650 extra on top of the $50 I put in every single week. And this is what I bought. I bought some Celsius. I bought 5 at $27.04, and I also bought half a share of Service Now at $98.83. because I spent just $50, and of course I put in $50. Now I got these. I didn't even know I was gonna do my dividends for MU. I gotta change it because I got 6 cents worth, and it got me 0.0001 share. I mean, that is not really. Give me the 6 cents. Give me the 6 cents. I'll let the 6 cents add on to another 6 cents, then another 6 cents, and then I can actually buy like freaking a lot more of a share than this. This is ridiculous. This doesn't even put a dent. It doesn't do anything. So I got to change that. That was funny to see. But yeah, thank you for watching. I appreciate it. I'm sure most of us are a little frustrated because this market's kind of, crapping on us. But, that's what's going to happen. And the hardest thing is buying when things are starting to go down. Now, I don't see a catalyst for the market to really shoot down consistently, like to really crash or something. So this is just going to be a little hiccup. Now, are we going to go under 10%? Now, that's the big thing. Next week is big. If the NASDAQ goes down even more and we hit correction, that's going to be very interesting because usually the S&P 500 and NASDAQ go together up and down, right? NASDAQ definitely goes further down and further up, but it's a big difference right now. It's over 3x. I mean, the NASDAQ is down 8%, the S&P is down 2.5. That's 3 times the difference. So that's going to be very interesting to see how much further tech can go down next week. If it does, we're in earnings, right? So maybe, we're just going to see a lot of reaction. We're going to see a lot of reaction from Apple and Microsoft and Amazon, all that stuff. We're going to see a lot of reaction, to the stock. So we'll see. But thank you for watching. I do appreciate everyone that does stick around. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.